Hi everyone, thank you so much for joining us here today. For those of you who don't know, my name is Corinne Thompson. I am the CEO and founder of ECAP Financial. We provide fractional CFO services for companies, and we also do financial due diligence and commercial due diligence for investors when they're looking to invest in another company. So right now on our YouTube channel, we have a series of videos talking about things to be mindful of and things to watch out for in a financial due diligence. And today I want to cover off another area that I think companies need to be cognizant of when they're going into their financial due diligence, and that is customer concentration risk. Now, in earlier videos in this series, I've gone through what we do to validate and to tie back revenues within a company. So we often look at things like ARR, which is annually reoccurring revenues, and MRR, which is monthly reoccurring revenues. And we tie those back to contracts, and in turn we tie those contracts back to invoices, and we tie those invoices back to cash coming in the bank account. So we can basically say, okay, this customer is paying this amount of money per year, and we can see that money ultimately coming into the bank account. Now, one of the things that we see often in earlier stage companies is a lot of customer concentration risk in one or two large organizations. And when I say customer concentration risk, what I mean is those organizations typically will make up about 35 to 40% in some cases of the revenue of a company. Now, the risk for investors here is that they invest into a company. That company has these large chunky contracts that make up the majority of the revenue. And then those contracts subsequently churn or they leave that customer. And when they do that, they obviously remove a bunch of the top line revenue, but then they take also as well cash flow with them as well. So what we do as part of the financial due diligence is we'll obviously flag any of these kind of top customers that make up kind of concentration risk, but then we'll do extra analysis around them as well. So the first thing we do, which is similar to what we do around the overall kind of ARR, is we just look at the contracts for that customer and we say, okay, what's the termination clauses in there? When are they likely to renew or have to renew? When does the contract mean that they have to go through a renewal process? And therefore, how long is that revenue basically guaranteed for? What are the termination clauses as well in that contract? So like what basis can they terminate that contract on? So we go through that. We also will tie back that contract to invoices and then into cash in the bank as well. The other things that we'll do is we will look at the pipeline, the sales pipeline of other deals, just to understand within those other deals whether there are other potential sales opportunities that will then dilute this customer down. So typically if there's one large tier one enterprise, it normally means that that company is going what I would call whale hunting. And whale hunting is basically when you look for like large tier one enterprises that normally have longer sales cycles, longer procurement cycles, but the flip side of them is they tend to come with like a higher annual contract value associated with them. So they pay more basically on a yearly basis. Now, what we do is we'll just make sure in that pipeline, like what are the contracts that are landing in the kind of next month, next 3 months, next 6 month basis in order to dilute that revenue down. We'll also as well look to understand what the sales cycles are of this business. So like I mentioned, like sometimes for these tier one enterprises, there are longer sales cycles, i.e. it takes longer to close these deals. And it takes longer normally to close these deals because there are multiple parties involved across the organization. There needs to be budget sign-offs potentially in these organizations as well. Normally someone in C-suite needs to sign off on these deals. And when I say C-suite, we're talking about the COO, the CIO, maybe the head of fraud, the CFO potentially. And there's also normally like legal teams involved as well, which means the procurement cycle tends to be longer as well. So we look to understand what that sales cycle is as well. And we document that as part of our financial due diligence. Now, what can help around that is basically if there is a long sales cycle, but there is quite a few deals that are, say, advanced in the pipeline, it means that those should be closing relatively soon, and therefore we'll be diluting that customer concentration relatively soon. The other issue sometimes with going after large tier one organizations is there's often quite a bit of like a headcount turnover, particularly at the top levels, or people move into different departments, which means if they move into different departments, you now have new stakeholders that you need to engage with, new stakeholders that you need to sell into, and new stakeholders who might have a completely different agenda to the one that you're working on or you're working with, or that the previous stakeholder there was working on and with. And so that's something just to be mindful as well about these kind of like tier 1 institutions. We also sometimes as well will do customer calls. So we will call that tier 1 customer and just understand, like, are they happy with the service? Would they recommend it to others? Just to get a feel for how that customer is thinking at the moment. Because that customer might be like, look, we hate the service, and actually as soon as the renewal is up or the termination is up, we're not going to renew with these guys. And again, that gives us a strong idea and indication of whether that company, is going to continue those revenues like going forward. So customer concentration is definitely a big piece. There are ways to mitigate that I've just described there, but I'd say, just be mindful going into the financial due diligence period that there'll be a lot of scrutiny and a lot of eyes on that revenue. Anyway, I hope you find that helpful. If you have any questions at all, please don't hesitate to get in touch with us. Thanks very much. Bye bye.